Hello everyone, my name is Kelly Voss and I have been in financial management for around 20 years. We will be going over some steps to financial freedom. Maybe you don't know where to start or which way is up, but you are not alone. We will be going over all the steps and starting at the bottom and working our way through. The first set of steps will be steps to financial success. Then we'll work steps to financial management. Then we will kind of go through completing your monthly budget. So the first step to financial success is going to be to gather all of your information. This is going to include documents and bank account information, statements, credit card statements, could be like check stubs or earning statements from employment, could be documents kind of saying what assistance you may be getting from government or family or friends. If you have any loans or any debt, you definitely want to collect all of that so that you can have the interest rates and your balance that you owe, as well as like minimum payments, any signed leases you might have, any tax statements if you still have them. And this can be either printed out like on paper, or if you have them all like in a computer file, that is great too. I would also love if you gather all of your passwords so that if we're in the middle of budgeting that you'd be able to kind of quickly reference. So really rack your brains and try to remember as much stuff as possible. It's better to have extra documentation that we don't end up using than not having something that we really need that actually impacts your financial decisions. After you have all of your documentation collected, we'll move on to the step 2, which is going to be to combine all of our information. Budgets have sort of a bad reputation, but they really are simply an accounting of how much money is coming in and how much money is going out. So a way to think of it is income is money coming in, expenses is money exiting. So the money coming in and out, that's happening whether you're tracking it or not. A common fear is doing a budget is going to open you up to being judged or someone else like imposing what they think you should be spending money on. That's not really what budgeting should be all about. So by completing a budget, you can start to determine how you want to prioritize your spending. By knowing your numbers, you can adjust according to your values as opposed to someone else's. Also, your budget has to be as accurate as possible or it's not going to be very helpful, so really try not to leave anything out. We will be working with a monthly budget, but daily, weekly, annually, those can work too if that's what you want to go with for your situation. Some expenses don't really work out necessarily by month. So most people don't go grocery shopping once a month. Most people don't get their oil changed every month. So you'll have to do some math in it with, if you go grocery shopping once a week, take that average and multiply it by 4, and that'll give you your monthly amount. The same with like annually, if it's taking pets to the vet every year, then you can divide that amount by 12 to come up with your monthly budget. As you're filling out your budget, you will be entering a current and projected budget. The current budget that amount will reflect what you are currently typically spending in a month. use the amounts you've spent over the past 2-3 months to help you determine the figure that you're going to enter into the current column. Then, if you expect any changes within about the next 6 months, you will put that expected amount in the projected column. You'll want to document why, like what the change is that is going to affect your budget. So for instance, you might be paying $900 in rent per month, but you'll be moving in 2 months and your rent might go up or down from that number. It might also include or exclude utilities, things like that. Similarly, you might have been going to the movie theater once a week for the past couple months, and maybe you want to cut that down to twice a month. So then you could divide that monthly figure in half for your projected. We will go more in depth when we actually get to filling in your budgets. Then we will also go through compiling all of your debts. Another number that is really a good snapshot of where your financial situation is currently would be to figure out your net worth. So a budget is giving you income minus expenses. Your net worth is showing you your assets minus your liabilities. So assets are anything that you own. Liabilities are anything you owe. So if you own a home or a car or a really nice set of golf clubs, or the money that you have in your bank accounts, and even the cash in your wallets right now, all go towards your assets. If you have a loan on that car, then that amount that you still owe on that car is going to be part of your liabilities, as well as any credit card debt. Liabilities are going to be what you owe. So things like credit card debt, loan payments, balances, an amount you might owe on that vehicle we just talked about being your asset. If there's a loan on it, then that goes towards your liabilities. Also, if you owe friends or family, or have any old bills that are kind of lingering, those all will go towards your liabilities, and then you can figure out that snapshot. So a couple things to keep in mind is your net worth is not a reflection of your self-worth. So you're going to come up with what your net worth is, and we don't really want you to compare it to anybody else. That is just a number that then you can compare the next time you do it to this time. So it's just a tool for you to see which direction you are going in your financial management plans. After you've combined all of your information and you know where your finances are right now, you can decide where you would like your finances to go. So this is when we'll move on to step number 3, which is creating your goals. We'll go into detail about the various kinds of savings later, but having savings is a good goal to have, but also things like being debt-free or eliminating dependence on assistance. Those can also give a good self-worth boost. Now that you have your financial numbers and you've got your goals, now this is where you can take control of the things that you can take control of. So step number 4 is making adjustments. There's only 2 ways to change your bottom line. It is by either increasing your income or decreasing your expenses. So you could increase your income by adding jobs or applying for assistance or pursuing child support or spousal support. You can decrease your expenses by reducing or eliminating miscellaneous expenses, avoiding late fees and overdraft charges. You could also look for less expensive basic living expenses. Also, make sure to utilize every available resource, so especially nonprofit organizations, as well as religious institutions, family, friends, thrift stores. As with most things in life, you cannot just set something up and then forget about it. You should be frequently reevaluating your budget, your savings, your income, your expenses, your net worth. Step 5 can be targeted, like as you achieve a goal, setting a new one. But it is also wise to occasionally start at the beginning and go through each step to make sure that you are still working with an accurate set of numbers. Consider updating your budget shortly after passing a projected date. You can check, like, were your projections accurate? Once a projected amount becomes the current amount, set your next projected amount. In my family, we calculate our net worth every year around New Year's. This is the whole family, so we do the family net worth. But then we also work with each of our school-age children to help them see what their net worth is, and that entails running to their piggy banks and counting up all their change and everything. So those are the 5 steps to financial planning. Now we will move on to the 5 steps of financial management. Pretty much everyone has heard that you should be saving for retirement or your children's college education or to purchase a home. And of course, those are great goals. However, those are typically long-term goals. It is not possible to save for retirement if you're living paycheck to paycheck or have a lot of debt. Throughout these steps, we will be prioritizing which expenses to spend your income on first, and then organize your savings goals. The first step is going to be covering the bare minimum of your basic living expenses. So food, toiletries, rent, utilities, transportation, communication, health expenses. We want to create the budget that has the bare minimum. So as you can imagine, there's a lot of housing options, and perhaps a long-term goal is to get into a larger house or one with more bedrooms. But what is the bare minimum you can work with right now? So you're starting with your bare minimum of basic living expenses. As you progress into steps 2 and 3 and 4, then you can sprinkle in miscellaneous expenses. So things like entertainment or eating out or upgraded living expenses. Once you are able to pay those bare minimums and not put anything on credit cards and not take out any loans, then you're going to be ready to move to the step number 2, which is going to be power paying your debt. So again, in a bit, we're going to talk about all of the possible places debt can be hiding. But then you'll want to, once you have your entire list of debts, you'll want to power pay your debts. So once you have your balance owed for each one of your debts and the interest rate and the minimum payment, you can look at which one could you pay off fastest, which one has the highest interest rate, which one has the highest monthly minimum payment, and you can organize that to pay them off as fast as possible, so that every time you pay off a debt, that minimum payment will be able to go into the next debt payment. So a lot of people will pay extra, a little bit extra on lots of debts. But the best way to really tackle that debt is to pay all of your extra on one debt at a time so that you can then roll those whole minimums into another debt. So steps 3 through 5 are going to be about savings. So again, we don't want to save for retirement if we don't have a little bit of savings in the bank for a car repair or a health or medical emergency, or to prepare for like possibly losing a job or a death in the family, or legal expenses. There's a good rule of thumb would be to have around 2 months worth of your expenses saved for emergencies. Once you have accumulated enough savings to feel comfortable that you'll be able to cover all emergencies, then you can move on to some short-term goals. So this is step number 4, saving for short-term goals. Things like a rental deposit for a new place or a vehicle purchase, possibly your own education expenses, or purchasing furniture or household items. So a lot of times people will take out a loan on furniture, and so you're making a monthly payment on it, but you're also including an interest payment because it was a loan. So saving for a short-term goal would be reversing that. Say, I know I'm going to pay $50 a month for a year to pay off this furniture loan. Instead, save that $50 per month for a year and then purchase the item with cash. Once you're ready to move on to your long-term goals, great. There's still an order within those that you want to work on. So based on like tax laws, you actually want to save for your retirement over saving for children's education. Once you've worked in savings for your short-term goals, you can move on to the long-term goals, which are things like purchasing a home, maybe traveling abroad, or saving for retirement or children's education. Something to consider even within your long-term goals is because of tax codes, it's more beneficial to save for your retirement first and then start saving for a child's education. So you're going to use these 5 steps of financial management to help you decide if you are ready to make a purchase. And are you going in order? Or do you have some goals being saved for before all of your debts are paid off? Now that we have gathered all of your information, we're going to kind of jump back to actually filling out your budgets now. So first you're going to start with your income. Make sure you write down everything you can think of, obviously including jobs, but unemployment insurance, Social Security, disability, any Veterans Affairs, the VA entitlements, any assistance programs. You can include child support or spousal support, SNAP, WIC, all the acronyms. Also include any assistance from family or friends. If they're paying your cell phone bill, maybe put your cell phone bill into your budget as the expense, and then put that a parent is paying your cell phone in that income so that they offset, but it's being documented, because that might be one of your goals, is to pay for all of your expenses on your own. After you have figured out all of your income, you're going to come up with a total. Again, if you think you're changing a job or newly entitled to a benefit, that would go in the projected column. And then you'll move on to documenting your expenses. And remember, we're going to start with the bare minimum of living expenses. So if you're currently eating out a lot or going to those movies every week, those numbers aren't going to factor in to this very tight bare minimum expenses side of your budget. So you'll want to figure out how much you spend on groceries each month. Again, how many times do you go in a month? What's the average that you spend? Multiply those together to come up with your monthly amount. Also, if you just took a pet to the vet, that you don't think you'll be doing that until a year from now, you wouldn't want to put that entire $500 in 1 month as a current amount, because you're probably not spending $500 every single month. So you're going to take that $500 and divide it by 12 to get your amount for current. Things to make sure that you are getting in your expenses would be your groceries and toiletries, rent, utilities, including like electricity, gas, water, sewage, garbage. Make sure you include any medical expenses for like co-payments or appointments and medications, equipment, any of those expenses. Make sure you include, if you have a car loan, that will go into your debt section, but if you're putting gas in your car or you have a recurring insurance payment for your car, make sure that you're adding that in. Also, if you end up taking taxis or Ubers, or sometimes spot your friend $20 for gas, that's where you want to put those amounts for your transportation. Make sure you include cell phone or internet combinations, and then anything else that you're making payments on that is truly like the bare minimum. Once we add up your income and your expenses, we'll subtract the expenses from the income, and that will give you either a surplus or a deficit. So a surplus means you have money left over at the end of the month. A deficit means you're going into debt more and more every month. The best way to know if your budget is accurate or not is how it feels at the end of the month. Do you feel like you're able to pay for all of your expenses and not put anything on a credit card? If your budget is basically, if you have not a huge surplus or deficit, then your budget's probably pretty accurate. If you finish your budget and it looks like you have a large surplus, but you don't actually have that, that means we've probably missed an expense or overestimated your income, and you want to kind of go back and make sure that that ends up feeling right for where you are at the end of the month. The same with if you end up with a deficit, but you're not putting things on credit cards or taking out loans, then we might have overestimated your expenses or left off an income source. So those are some of the ways to make sure that your budget is accurate so that you can actually make those changes. Another part of your budget sort of that you want to really make sure you have all of the information for is going to be your debts. So you're going to write down every single person or business or bank that you owe money to. So whether that is a credit card or a loan from a bank, whether it's a personal loan or a vehicle loan, you want to make sure you collect all of that information. Even any bills that are like in collections or just an old bill that is just still sitting there. Possibly any like fines or legal expenses you might owe, as well as any time you might owe a friend or a family any money. Go ahead and put all of those there. Even if it's a family member that isn't charging you interest, put 0 interest there. Or even if they're not expecting a minimum payment right now, you still want to document all of your debt. And then if you get more debt, put it on here. Those debts then, the minimum payment, and then what you could project once you figured out which ones to power pay first, those amounts will factor in as an expense to help you come to whether you have a surplus or a deficit. After you have completed your budget and compiled all of your information, you should feel really proud of yourself. Even if the snapshots don't look great right now, you should feel confident knowing that you have the tools now to move forward positively. Remember to continually reevaluate all of your budgets and goals and amount in savings so that you know those numbers, and that will help you decide which, if any, changes you would like to make.